Good evening and welcome to the CNH webinar series. We are delighted to have you here today with us. This webinar series is proudly brought to you by Bursa Malaysia in collaboration with our company Excellent. So before we start, please confirm that you can hear us loud and clear by typing yes or type in 111 in the chat box so that I know you are able to listen to me clearly. Great. Now, as you may have not already know that Bursa Malaysia Derivatives is going to launch a new currency futures contract on 11th of December, which is the first currency futures contract in Malaysia. So that is the reason why we are having this special webinar series for you. Our topic for today is multi-style CNH trading, from entry strategies to expert managed exits, which I believe this is something new and interesting to you. I'm CY Saw. I will be the moderator for today's session. Now, today's webinar, we will be having two sessions. The first 75 minutes will be presented by our two speakers, To Yen Lu and Jose Blasco. We are privileged to have them with us today to share with us this informative session. Then we will follow with a Q&A session. I hope you find this session enriching and informative. I noticed some of you here just entered this webinar. Before we begin, a final quick check on your audio as well as on your slides. If you're able to hear my voice and see my slides, please type in 111 or yes in the chat box, or give us a thumbs up or any emoticon to confirm that you are able to hear me clearly. All right, great. And if needed, please adjust your volume settings to ensure optimal sound quality. To ensure you can enjoy the smoothest and highest quality video experience on your side, I highly suggest that you turn off your video camera during this session, as this will help ensure that everyone can enjoy uninterrupted video and audio and have an optimal learning experience. Along the way, while our speakers are presenting, if you have any questions, you don't have to wait until the end of the webinar. You can start submitting your questions in the Q&A box, and we will get our speakers to clarify the questions you may have related to this webinar. And to ensure we can address your questions, all you need to do is to type your questions in the Q&A box and send them to all co-hosts. This will allow me to directly access your question easily. And please note that, due to the volume of messages running in the chat box, it may be challenging for me to spot your questions if you don't send your question in the Q&A box. So remember, along the way, if you have any questions, you can type your question in the Q&A box. As you may have already know that this webinar is sponsored by Bursa Malaysia Derivatives. We are excited to announce that we will be holding a lucky draw at the end of this webinar, where Bursa Malaysia Derivatives is generously giving away Touch and Go e-wallet prize worth 300 ringgit. And we are going to select 10 lucky winners for today's lucky draw. So to be eligible for this exciting prize, simply stay tuned until the end of the webinar. I will be sharing more information on how you can participate and stand a chance to win. So don't miss out. And let me give a quick tip on how you can win this lucky draw. So all you need to do is simply listen closely and attentively to everything our speakers have to share later. All right. So let's get started with our first topic. We are honored to have To Yen Lu. He will be sharing with you about the FCNH currency futures contract. To is responsible for the product and market development in fixed income and currency in Bursa Malaysia. He has vast experience in the area of treasury, asset liability management, structuring, and gold desk. So without further ado, let me pass this to To. To, the stage is yours.
Hi, so I will do some introductions in terms of the contract specifications that we are launching on 11th of December. Is our first currency futures contract, and we provide us regulated and a safe trading place for everyone to participate. So currently we do have a commodity derivative, we have an equity derivative, and the well-known will be the FKLI. FTSE Bursa Malaysia KLCF futures, and the SCPO, we have which is the leading for the palm oil industry. And we have a financial futures as well. And right now we have a new asset classes, which is the currency derivative. Okay, this is the contract specifications. For this futures currency, right, underlying is a dollar CNH. And why we call the CNH is because it is a offshore renminbi. And if let's say it's a dollar CNY, which is actually referring to the FX rates trading at the onshore China. So for our is the offshore renminbi. So the code, the prices is actually based on the dollar CNH. And in terms of the settlements method, is a cash settle. That means when you hold the contract till maturity, you are not getting the currency exchange, but it will only settle in terms of the differences against your entry level, and it will settle in renminbi. And this is a mini contract size. So in terms of the contract size is US dollars 20,000. The minimum price fluctuations is 1 tick. The 1 tick is equivalent to 1 pips, which is a 0.0001. And the minimum price fluctuations is equivalent to renminbi 2. And these sessions, right, for our day trading sessions is going to start from 9 a.m. until 6 p.m. And for the after hour trading, which is equivalent to our night time, it's going to start at 9 p.m. until 2:30 in the midnight. And the T+1 session is only available from Monday to Thursday. And in terms of the contracts months, we have all the way up to 2 years contract, the spot months, and the following 3 calendar months. And when it comes to the final trading days, it will become the 3rd Wednesday, the 2 days business day prior to the 3rd Wednesday of the contract months. And on the final trading days, the contract will cease at 11 a.m. Malaysian time. This is due to there's fixing observations to fix the final settlement prices for the contract. So there are few points, especially we would like to highlight, is that this contract will be settled in renminbi. So in terms of all the profits or the losses, the variations of margin changes will settle in renminbi. And our final settlement prices, it will based on the Hong Kong exchange settlement prices. But the observation of the final settlement prices is actually based on the fixing done in Hong Kong as well. So in terms of the settlement prices, is based on the international fixing prices. Okay, this is what I mentioned earlier on. The fixing is very transparent. It's based on the Treasury Market Association of Hong Kong. It will publish at 11:30 on the final trading day. All the transactions between 10:45 a.m. to 11:15 a.m. Hong Kong time transacted with a minimum US dollars 1 million executed through all the approved money broker by the Treasury Market Associations will be calculated into the fixing prices calculations, and it will based on the volume weighted average for the calculations. Okay, so I just share with everyone the calculation of the PML. So in terms of the calculation, PML is quite pretty easy. For assuming that you sell one contract at 7.31 and you buy back at 7.3, so it's difference of 100 ticks And the 100 ticks, you just times the notional, the contract size that you enter. Assuming this is a one contract, so it's a 20,000. So it's 0.01 times the 20,000, which is the notional size. That will become your profits, renminbi 200. This is another example as well. If you sell the renminbi at 7.35 and you buy back at 7.31, so you will make 400 ticks, and you will based on the 400 ticks times the 20,000 for one contract, then the gross profit will be equivalent to 800. Okay, before I have done the introduction of this, the FCNH, but at the same time, we also like to share with everyone regarding we have another campaign that is going on, which is the grand prize of the campaign is the FGLD. You can see the criteria is open to all the retail participants, and we excluding all the professional traders who are signed up with Bursa. For example, the local participants or the retail traders incentive programs. And the retail participants that who achieve a minimum 120 lots of the FGLD contracts during the campaign period is eligible to win a prize. And the selection of the winner will based on the highest total trading volume and on the earliest date throughout the campaign periods. And in terms of the grand prize, we have a 20-gram Palm Fortuna Gold Minted Bar, and the first runner-up will be a 10-gram Palm Fortuna Gold Minted Bar, and the second runner-up will be 5-gram Palm Fortuna Gold Minted Bar, and we have 7 winners in terms of consolations, which is come with the 1 gram of the minted bar. Yeah, CY, I'm done. I pass the floor back to you.
Thank you, To, for informative sharing about the FCNH currency futures contract. Now, our next session will be presented by Jose Blasco. Jose is a multi-asset trader who specializes in options, equities, futures, and currencies. He has vast knowledge and experience on trading global markets, and he trades both directional and non-directional strategies across multiple time frames. Besides that, Jose is also a trading instructor, and he has been training and mentoring traders worldwide. Without further ado, let me pass this to Jose.
Thank you very much. So let's begin. Everybody. I am very excited about today's presentation. Again, not only we have a new product in front of us, futures, FCNH, futures of Chinese yuan. But on top of that, we are talking about a product which, as you will see, is going to be extremely versatile to be able to adapt to the various trading styles in the room. We are a pretty large group here attending this webinar, and I'm pretty sure that if we were to have a conversation one-on-one, everybody has specifics when it comes to their trading style or the way they would like to approach the markets. And we're gonna go over this multi-style trading approach using the futures CNH. Hopefully this presentation will open your eyes to things that can be done as well as how to do it. Okay, before we get started, as always, we have a financial disclaimer, which I am leaving on the screen just for a few moments, so you have time to read it completely. This is obviously trading. This is financial markets. There is financial risk involved. I understand everybody understands that, but it's always important to remind everyone that we are going to be looking at trading CNH futures in a way that is professional and serious and mechanical and systematic, where risk management is in the very top of the priorities. So the goal is to have methodologies that provide an edge, and we keep replicating and repeat our processes while we keep risk under control. Okay, so everybody, hopefully you had time to go over the financial disclaimer. Anyway, so the agenda for today, to be honest, is going to be a little bit heavy, okay, because I plan to make this session as rich as possible. Again, the title of the session, which is multi-style, means I need to talk about multiple ways on how to do things. And therefore, the challenge is that I'm going to share a lot of information. And by the way, there is also a prize as well where you will be quizzed and you will be queried on certain questions. So I need everybody, if I may ask, I need everybody to be very, very focused during the session, because again, I'm pretty sure it's going to be powerful, but at the same time, it's going to be full of information. So make sure you don't miss it. Okay, we're going to talk about trading styles, and then my goal is to create a framework, which is going to be a two-step process by which, within that framework, everybody, no matter how you trade, no matter how you plan to trade, no matter if you are a long-term trader, a short-term trader, anywhere in between, if you are a Fibonacci guy, if you are a trend follower, if you are a contra trend trader, if you are a mean reversion guy, no matter who you are, the idea is that your steps within your methodologies fall into this two-step approach to trading. Okay, so we'll talk about styles, we'll create a framework which will apply to everyone. It will kind of be looking at trading in a two-step process. And from there, we'll look into how to evaluate step one, assess the market condition on step one, take a decision, which is mechanical and systematic. And from there, we'll move to step two and do the same with step two, defining entries and exits in a way that is systematic and mechanical and objective. So there is no subjectivity in the process. So once we have this ready, we will then be ready to put the trade in place, either long or short. I'm pretty sure in the group today, we have traders that may have never traded before. We may also have traders have traded a long time. And therefore, to some of you, going long or being a buyer is normal or easily understood. To some of you, going short, which is basically profiting from down moves, may be very easily understood or maybe counterintuitive if you never did it. So again, we're going to be talking about both. So it's all clarified, because the beauty of the CNH futures is that we could actually profit from both directions, the long and the short. Okay, and we'll talk about both. Okay, then I will reach the end part of the presentation with the slides, which is going to be some chart examples to illustrate the lecture. By the way, you can see item 11. There is a bonus for you guys. Okay, there is a little bit of a help. I'm going to be using some tools to do the market analysis, and I'll be happy to share one of these tools with you all. And once I complete all of that, then what we'll do is, instead of using slides, I'm just going to move to real-time charts, and we will apply what we learn in the session today. We will apply it to real-time markets, and that way the session will, beyond being a lecture, will also have some practical application. So be ready. Okay, be ready, everyone. I will start talking about what am I looking for. Okay, keyword what. From there, I will move into how to do it. Okay, how to do it, which is the interesting part. Knowing that there are different styles. So I'm going to be talking about different how to do it. Okay, we're going to talk about that. And then we'll move to the real-time charts. Okay, very good. So hopefully this is understood and you guys are with me and excited just like I am. Introduction, I will skip it. CY was very, very kind to introduce me, in a very complete manner. Thank you very much. So I'm going to skip that. And the one thing I will want to say, in case you want to go take a look, is that I am also the founder of a company called Tradictive, which operates the brand Trade with UFOs, where UFOs stands for on-field orders. And they look like UFOs on the chart, red UFOs and green UFOs. Which is my favorite way on how to trade when it comes to the technology I use and identifying where the buy orders are, that's where I buy, where the sell orders are, that's where I sell. And again, that's my favorite way on how to trade. Having said that, today's presentation, again, is multi-style. So while I will show a little bit of the UFO things that I do, I will go beyond that to give everyone choices on how to do the trading, no matter your trading style. Again, trend traders, counter trend traders, Fibonacci guys, technical analysts, all of that. Okay, so no worries about that. Just sharing, what I do. Good. Can I have a quick I'm ready on the chat box. Okay, if you're ready, please type I'm ready, because I am. I'd like to know if you are too. And by the way, I'm going to be watching the chat box. I welcome you to type questions as we go. I may pick a question here and there if it's directly very much related to the slide that I'm covering or something like that. We will have a proper formal Q&A session at the end, but please do not wait until the end to type your questions. Feel free to type anytime. Thank you so much for all that feedback. I am indeed also ready. Okay, so let's begin. Okay, so the first question is, are you an active trader? Are you a passive trader? Or are you anywhere in between? Good news is that CNH futures will allow you to do all of that. You will be able to use those new contracts that are going to be released at the beginning of December, isn't it? You will be able to use this beautiful new product if you are an active trader and you want to trade, short-term trades, intraday trading, intraday timeframes, and you want to take multiple trades per day, for example, you will be able to do that, as well as if you want to take it more easy and you want to do the complete opposite, right? Like long-term passive investor, maybe hedging a portfolio that you may have on a different exchange using the CNH currency, etc., etc. Okay, so you could do all sorts of applications as you will learn today, and of course anywhere in between. Okay, there is not only two choices, active or passive. There are, to be honest, there are many more choices. Okay, so now for those two choices, I propose to think of trading, as I was saying before, as a two-step process. And so let me explain what this means. Okay, and again, remember, first I'll talk about what am I looking for, and then I will talk about how to do it. Okay, so right now we are talking about what. Okay, what. So what are we looking for is to find market conditions that gives us a statistical edge, meaning that if you take a trade, you are more likely going to profit than lose. Okay, so if you were to take a trade without doing a market analysis, doing a proper assessment, without knowing if being the buyer or being the seller is the right thing to do, then you are basically exposed to how lucky you are, and then this is not trading. This is more, something that you do for fun, but not something that you do seriously. So the first thing I would want to talk about is step one, which step one is precisely avoiding exposing ourselves to luck, and instead trying to create our own luck, if I may use the word luck, by doing a proper assessment of the market condition and define, as question one suggests, should I be a buyer or should I be a seller? Is it even time to trade, yes or no? That's the question. There are times where a market condition suggests not to trade and wait. Well, guess what? That's very important. I mean, if you have read trading books or you have been trading for a while, you probably have heard the term sitting on your hands. There are times that the best thing a trader can do is wait, okay, until a market condition is properly defined, and now you have a statistical edge to either be a buyer or be a seller, go long or go short. So the first thing that we need to do is to answer that question. We will load a chart of CNH futures. We will look at the chart and we need to process some sort of a methodology. I'm going to go over different options for you on how to do it. Remember, now I'm talking about what to do. In a moment, I'll talk about how to do it. So we will go through a process where you will now know if it's time to be a buyer or be a seller. And we're going to be disciplined there, meaning that if you decided on step one, I'm going to be a buyer, I'm going to go long, you will not change your mind on step two or later in your process. And now next thing you know, you are shorting the CNH futures. We will be disciplined. We will look at question one, answer question one mechanically, objectively, and then go to question two and also answer that question. Again, you're probably wondering, how do you do that? Again, remember, I'm going there. Just give me a moment. First, I need to talk about the framework, the two-step process, so you know what I'm about to show you and how to do it. Okay, first, we are talking about what to do. So once you have decided if it's time to be a buyer or time to be a seller, the next question is, what's my entry and what's my exit? Okay, so entries and exits. Okay, entries and exits is the same. Oh, sorry, fat fingers today. So entries and exits, it's gonna be the next question, because if you know it's time to be a buyer, but you buy at the wrong price, or you buy too high, or you wait to buy too low and it never happened. So then, you know, you don't have a good trade. You may be trading in the right direction, but you have a very poor reward to risk ratio because you entered at the wrong price. And same thing with your exits. Okay, and by the way, exits, there are two types. Okay, exits in case I'm right, and exits in case I'm wrong, right? So once you enter the trade, we will not be right all the time. That's why we need to manage risk. So when we are wrong, we also need to define when to exit. What price am I going to exit? If I bought at this price and it goes against me and it goes down, when is it that I'm going to call it the day and exit the trade for a predetermined loss? I need to plan for that before I take the trade. And of course, if I'm right, meaning that the market is going my way, let's say I bought CNH futures and the currency is going up and going up nicely. Well, there is a moment in time that if I get greedy and I don't close the trade for a profit, it may turn against me. And what once was a profit end up being a loss. And I will ask this question to the room if you guys are okay to answer that in the chat box. The question is, have you ever been in a trade that was profitable for a while and then it turned against you and you ended up with a loss? Has that ever happened to you? Right? I would love to see answers on the chat box. And again, everybody, this has happened to all of us, by the way, to me too. Okay, no problem to share that information with you guys. And it's important because it has a lot to do with step 2. Maybe, again, just maybe, but maybe you were in a trade where you had planned on a good entry, but you didn't decide on what was your target point, what was your exit price in case you were right. So the goal here today will be to plan for step 1 and step 2 before we click the button and take the trade. And from there, do additional analysis for risk management to calculate the trade size, and then take the trade once everything has been predefined and you know exactly what to expect in case you're right and in case you're wrong. This is what I am looking for. Okay, what I am looking for. Now we need to talk about how to do it. And thank you for sharing all that information, everyone. Now we need to talk about how to do it. And the first thing I want to share with you is a list of timeframes, because this two-step process applies to the intraday traders, the swing traders, the position traders, the investors, long-term passive investors. So this two-step process applies to everyone. The only difference is that depending on how active or passive you want to be, the time frames to be used to implement the methodology are different. For example, let's say you tell me, I am a swing trader, a little bit active. So then you may take the 4-hour time frame, also known as the 240-minute chart. You do your step 1 with the larger time frame. So you do your market condition analysis, so you know if it's time to be a buyer or a seller on the 4-hour time frame. And now to do your step 2, which is to pick your entries and your exits. So now you're going to use the 15-minute time frame, which is a lower time frame, which is in line with the 4-hour. Why would you use a lower time frame? Well, because when defining entries and exits, it's definitely very useful to try to be as precise as possible, gain a bit of evidence that what we are looking for is happening, but not to gain too much evidence, because then that would hurt too much the reward to risk ratios. So then it's very common practice in the industry to look for entries in a lower time frame compared to the time frame where you do your market assessment. Some more complex methodologies may actually look at 3, 4, 5 timeframes. I am a believer that simple works, and while I am, believe me, a perfectionist, in trading, I am not. In trading, I am just a pragmatic guy. Pragmatic to me means do 20% of the effort to get 80% of the result, instead of do 100% of the effort to get 100% of the result. I mean, 100 is more than 80, but if you need to do 100% of the effort and look at, 25 different charts to plan on a trade, I mean, I'm not saying this is wrong, but I rather look at 2 time frames, keep it simple, take more trades, and, that's it. That's me. So again, we're talking about multi-style. this also has to do with multi-style, in this case, my style. So you can certainly use this list of timeframes and add another column or two if you happen to have experience on methodologies that benefit from multiple timeframes and you do it this way. Not a problem. But again, in today's presentation, I want to keep it all very simple, two-step process, two things to do. Should I be a buyer or a seller? Is it even time to trade? Yes or no? Step one. Once I have answered what to do, so then define the entries and the exits. And to do that, I'm going to use two different timeframes. The larger time frame to do step one, the lower time frame to do step two, depending on being an intraday, swing, position, or investor. That's the plan. Can I get a little bit of feedback on the chat box? A quick yes or no, a quick okay, all good, too fast, too slow, following, not following, repeat this, repeat that. I would love to hear that from you guys on the chat box. So that way I can evaluate better how we are doing at this moment in time. Okay, wonderful. This is great. Thank you, everyone. By the way, in case you haven't noticed, I do have an accent. English is not my first language, and I do speak fast because this is exciting to me, so I cannot stop it. Seriously now, if I go a bit too fast at times, feel free to ask me on the chat box to go back and repeat a concept, and I'll be more than happy to do that. Okay, I just want to make sure everybody follows. Trading CNH futures, it's gonna be such a powerful thing to do, and I want to make sure everybody follows me. Okay, now remember, in the presentation I said I'm going to talk about what am I looking for and then how to do it. I am still talking about what am I looking for, but now I want to show you what I am looking for in a visual format. So then after that, I will move into how to do it as well in a visual format. But first, one last time, what am I looking for? So in this case, we are looking at one chart of the CNH futures. And the first thing I do, my step one, which is to determining if step one is down here, right? So determining if I want to be a buyer or a seller or what to do, for me, I do that using a tool which is called AutoClimate. You do not need to use this tool, even though, to be honest, at the end of the session, I will grant everybody access to this tool so you can use it if you'd like as well. But that's not the point. The point is that step one could be done with multiple techniques. You may be using Ichimoku clouds. You may be using trend lines or looking at pivot highs and pivot lows in a trend. There are many ways on how to do it. I will actually perform multiple ways on how to do step one. Again, my preference is to utilize trading technology. So I use this tool called AutoClimate, and in this case, you can see I got a blue dot. What does the blue dot mean? The blue dot mean I have permission to trade long. That's it. So this is the answer to my question one, which you could have got by doing many other things. Maybe you are an Elliott wave trader, you have been counting waves, and you now concluded it's time to be a buyer. So again, the technique right now is not important. What matters is that you did something on step one to determine if it's time to be a buyer or time to be a seller. Once you have determined that, the next step is to set your entries and your exits. So in this case, the other tool I use, which is the one I mentioned before, is called the UFOs. UFOs, in case you join late, UFO stands for on-field orders. Okay, green means buy on-field orders, red means sell on-field orders. So what is my expectation? Well, my expectation is that the CNH would come here. I'm not sure if that's going to happen or not, but if, keyword if, it comes here at 115.56, then I will want to be a buyer, expecting it to go higher. Why would I expect the CNH futures to go higher? Because I have buy orders and because I am in a market condition where I am expecting a continuation on the move to the upside based on my analysis, which again I will go through different ways on how to perform such analysis. So therefore, since this is what I'm expecting, again one more time, I am in an up market condition, so I'm just going to patiently wait for the CNH to come to 115.56 buy. From there, I expect it to go higher. So then, if that's the expectation, I guess you would agree with me that my entry should be 115.56. Then, in case I'm right, I will take profits at 126.81. Sorry, let me rephrase that, at 121.57. And in case I'm wrong, below the green box, if the CNH was to keep going higher instead of going lower instead of going higher, then right there I would stop myself out of the trade for a predetermined loss. Of course, this is not the ideal situation, but that will happen, guaranteed. So we need to plan for both, for when we are right and for when we are wrong, not only for when we're right. So entry 115.56, stop 112.24, and target 26.81. That would be the price points that we select for the trade. So that would be step one and step two. And again, I need to get more detail to show you better how I do this. Okay, I'm still in the what, explaining what do I want to do. So I have done my step one, defining the market condition. I have done my step two, defining my entries and exit. Entry, exit in case I'm right above, exit in case I'm wrong below. All my values are predetermined. So now there is only one thing left for me to take the trade, which is to calculate the risk, calculate the reward, decide how many contracts, in this case, one. Again, I will show you how I did that in a moment with more detail. Right now, I just wanted to be visual. This trade, as you can see, had $93 of risk in exchange for $315 of profit. So that's a 3-to-1 reward to risk ratio. For the ones of you that have been trading before, you know what this is. I will explain that again for the ones of you that don't know what that is. And let's say you approve the trade. So now you just place an order with your broker. And now you wait. And what happened in this case, as you can see, is that the CNH, let me zoom in. So the CNH, very nicely, the day after, came back, entered the green box, and the order would have been filled, and then it went all the way to the red, and that would have been a profitable trade. I'm sorry about that. I just hit the wrong key combination on my keyboard. So now, Mr. To a moment ago gave us information about the contract specifications. So now that we have our first trade example here, I want to kind of mix a little bit of the contract specification data you have been given earlier with this particular trade example that I'm giving you now, and understand better the characteristics of this particular trade. So first thing that we have is we have an entry price of 7.1556, as I mentioned before. The stop loss, as I mentioned before, would have been 7.1224. And the exit price, in case right, would be 7.2681. So that would be the plan of the trade. And I want to emphasize one more time that all of this was predetermined before placing the order with your broker. Okay, all of this is pre-planned. So that's how you can manage your risk and stack odds in your favor. Do not get emotional in your trade because you pre-plan it. Okay, you don't enter the trade and let's see what happens. We pre-plan everything professionally. Okay, in this case, we are using one CNH futures contract. It's one contract where we have learned earlier that each tick, which is 0.0001, the equivalent of pips in the world of Forex trading. So each tick pays you or loses you, in case you're right or wrong, 2 renminbi. Okay, so converting this to US dollars, okay, this trade had a trade risk at the time of the screenshot of $93.02, which is the value you can see here. Why? Because the distance between 115.56 to 112.24, which was the distance between the entry and the stop loss, was 332 ticks. 332 ticks at a rate of 2 renminbi per tick, in case you're wrong, converted to US dollars at the time of the screenshot, that would be $93.02. So the trader was risking $93 in this trade. Okay, and by the way, if this is too much, we'll look at ways later in a moment on how to make this less. If that is too little, you can add more contracts. again, all of this is going to be scalable. This is also the beauty of futures, and in this case, CNH futures. Great product to be traded for all styles, large, small accounts, and everywhere in between, as you will see. So the notional value of the contract is 20,000. The margin required, this will change from time to time, and the exchange will publish their margins, and the brokers will apply that to your trading account. But as a rule of thumb, is around 3,500 renminbi, which is about $500 US. So in other words, you are getting into a trade that if you were to do this trade with your own cash, you would need $20,000 because each CNH future contract represents 20,000 US. But because of the beauty of how futures work, you only need $500 in your account to do that. It's called a margin, which means that you are trading on a 40-to-1 leverage. Now, 40-to-1 leverage means that you profit at a rate which is 40 times faster. You also lose at a rate which is 40 times faster. But that's not an issue at all, as long as you are disciplined and you use stop losses or you are hedging, etc., etc. As long as you have a contingency measure in place, well, you are actually in a very nice position where you know your risk is $93.02. So that's not a problem, and it's a great, powerful use of your money. It's a great return on investment, because if you were right on this trade, which that was the case, okay, we got to 300. Actually, I'm just realizing a typo here. We didn't make 332 ticks. We actually made 1,125 ticks in this trade, and that would have paid you $315, because each one of those 1,000 plus ticks pay you at a rate of 2 renminbi converted to dollars. That would be $315.21. This was built on a daily time frame. So this is kind of like a swing type of play. This was a 3-day trade, and you made $300 by using $500. So that's around 60% return on investment on your capital, which again, it's really, really powerful, while your risk is well contained, because thanks to the use of stops, in this case, worst case, you would have risked $93.02. So this is the what I am looking for. I'm looking for trades with a good reward to risk ratio, with great potential for a great return on investment, where the risk is contained. And in this case, I was using a daily time frame, which makes me a swing trader. But we're going to look at other examples where I can be more active or less active or anywhere in between. And it will be all about the use of the, what was that? Right here. It will all about be the use of the time frames. And depending on the set of time frames that you use, you will make yourself more active or less active. Okay? Good. So now, if I may say it this way, now we are ready to go. Now we are speaking the same language, and we are ready to get a bit deeper into the how to do this. Okay, the how to do this, knowing that all of you have a different trading style. Okay, that's why the name of the session is multi-style trading, right? All of you want to trade CNH futures, but some of you may use moving averages. Some of you may look at volume. Some of you may be Elliott wave traders. Some of you may be using parabolic SAR, economic indicators. Some of you may be looking at seasonality patterns. Everybody's different. Okay, so the idea is to take your methodologies and make sure they fall into the group of step 1 and step 2. Okay, so maybe you use 3 techniques. Maybe you use moving averages and Fibonacci and support and resistance. Or maybe you use Bollinger Bands and MACDs and CCI oscillator. Maybe you look at chart patterns and candlestick patterns and technical analysis, support and resistance. Everybody's different. So whatever is it that you use in your trading, try to make it fall into either step 1 or step 2. Remember, the purpose of step 1 is to decide if it's time to trade directionally, yes or no, and if so, long or short. Okay? So I'm about to go over multiple examples of using some of those techniques. Okay? And hopefully that will resonate with you, and that will help you to find out, how to do it in your own trading. This may even help you beyond CNH futures to apply to other markets too. To other beautiful markets that trade in Bursa Malaysia, but definitely this applies 100% directly to CNH futures, which is our conversation today. What can I do for step two? Well, step two, again, there is a collection of things that we can do. As you know, I prefer auto UFOs, but maybe you prefer support and resistance. Maybe you are a Fibonacci guy. Maybe you do breakouts. Maybe you are looking at trend line breaks. Maybe you are looking at, crossovers on the MACD. Maybe you're looking at gaps and you like to trade the gaps. So again, everybody's different. And I want to give you visuals and examples of each of those techniques. So hopefully that helps you to know better how to trade CNS futures and create that process which is more systematic, where you follow a consistent, mechanical, repetitive process, and you just keep doing that. And every time risk is contained, potential for profit is greater, good reward to risk ratio, limited risk, repeat. Okay, and you do that with a product such as CNH future with a great level of leverage, with a regulated environment like Bursa Malaysia, and you are very safe, of course, as long as you have a good method, as long as you are disciplined, as long as you manage your own trading emotions, because we are human. Okay, so all of this is very important. Okay, but again, maybe you are all of that and more, but you may be using some non-regulated product and you get in trouble because you are trading the wrong product, right? So again, it's important to add odds in our favor in all ways. So example number one, okay, on the slides, we are looking here at a swing trade example where randomly I picked technique number 3 when doing step 1. So I am doing step 1, and let's say my style has me use technique number 3. What was technique number 3? Well, if I go to this list, step 1, technique number 3 was using trend lines and channels. So maybe for you to define if it's time to be a buyer or a seller, what you do is that you're looking at trend lines or channels in the market, and that helps you identify the main direction of the market, and that's how you decide if it's time to go long or short. Let's say you are a swing trader and you are doing this with a 4-hour time frame. So then you load the 4-hour time frame of the CNH future and you see this particular price action, and that gets you to draw this little channel, lower highs, lower lows, you draw your beautiful little channel there, and that is basically telling you that in the 4-hour time frame, you have this directional movement that is happening towards the downside. So at this moment in time, I don't want to fight it. I don't want to fight the market. The market is bigger than me. I stand no chance. I need to go with the flow. And therefore, again, let's assume this is your trading methodology, your trading principles. So then you want to go short. Okay, so at this moment in time, you are a trader who, using technique number 3, trend lines and channels, you decided on step 1, I want to go short. So now what? Well, now you need to do step 2, which is to define your entry and exit points. Then you will calculate the right size, and finally you will take the trade. That's it. So step 1, what should I do? Go short. That's what we decided using technique number 3. Okay. Now, let's say you tell me I don't use technique number 3. Okay. In this case, it's me. I use auto climate. I'm calling it technique number 0 because it was not on the list. So I'm calling it number 0. So auto climate is like that. And again, I will give you access to this tool at the end. So if it's blue, you want to be a buyer. If it's red, you want to be a seller. Statistically speaking, you have a statistical advantage. You actually even have some statistical figures there that if I have time, I will explain what that means later on. Okay, 2 out of 6. So it means that the trend still has potential to keep developing to the downside for another 4 more candles, 4 hours each. This is what this means. So you are this trader number 2. You are still performing step 1. You are also looking at 4-hour time frame because you are the same swing style, right? And even though you use a different technique, you are doing the same thing on step 1. That's my point. My point is to have this framework, this mental process of what do you do in each step. What is the purpose of step 1? Decide if you want to be a buyer or a seller. The prior trader using channels decided it's time to be a seller. The next trader using auto climate, in this case, that's me, decided time to be a seller. So now what do I do? Again, I'm going to do it in a moment. You do step 2, define entries and exits, then you find the size, and then you place an order. Same idea. Now, what if instead of trend lines or auto climate, what if you use moving averages? And again, I'm about to repeat all of these. We're real-time charts, okay? I just wanted to have these documented on the slides in case you want a copy of the slides so you can have these documented like a lesson if you wish. But I'm gonna do this live in a moment as well, okay? So let's say you are using moving averages, and maybe you use 2 moving averages and there was a crossover of the moving averages right there. It may be difficult to see. Let's see if I can zoom in, and that is better seen. You can see the yellow going under the orange right there. Okay, so that tells you, starting from that candle, which is 1, 2, 3, 4 candles ago, okay, starting from 4 bars ago, that crossover in the moving averages told you this is a down market where the average price keeps moving lower. That's why the moving average is crossing over. And therefore, I want to be a seller. So notice that 3 different traders with 3 different styles using 3 different tools mechanically concluded, I want to be a seller. Okay? So let's say that's you. So what do you do after? You need to plan your entries and your exits. You need to decide on your size and then place the order. Okay, which is what I have not done yet. I'm going to do it now. Okay, can I get a quick confirmation on the chat box when it comes to everybody's following the process so far? So step 1, I'm asking about step 1. Everybody clear on the purpose of step 1 and the fact that you could perform step 1 doing a multitude of different things, okay? I prefer to use AutoClimate, which is one of the tools of the companies, the company I have founded. It's a free tool. Later, I will, show how you can get access to it. But that doesn't matter. You could be using, as I said, moving averages, channels. You can be using, it was a long list, right? Elliott Wave, ADX, DMI, Ichimoku Cloud. What matters is that you have a specific way, mechanical way that gives you a statistical advantage, and you just do it mechanically. That's very important. Okay, so you don't get undecided about what to do. You don't get all over the place. You don't guess what to do. Guess by definition is low probability, isn't it? Good. Thank you for the feedback, everybody. Thank you very much. Okay, so now step 2. Now that you have defined, what direction in which to trade, so now you want to look for entries and exits. You want to define your buying price and your selling price. So let's say that you are a Fibonacci trader. That is technique number 2 on the list I gave you. Okay, so let's go back here to the list. This is my list for step 2. And technique number 2, I picked it randomly, is Fibs. Okay, so maybe you're a Fibonacci guy, you like Fibonacci retracements or projections, and that's what you do. That's it, right? Maybe you do other things in this list. Maybe you even do something that is not on the list. Okay, that's fine. So let's take a look at how you would do it and the implications. So in this case, remember in the prior step, step 1, we concluded using whichever technique on the 4-hour time frame, we concluded it's time to be a seller of CNH futures. Step 2 has us now move to the 15-minute time frame, which is the lower time frame. Okay, remember, 2 time frames, 1 time frame for step 1, 1 time frame for step 2. So we are now moving to the 15-minute time frame. And on the 15-minute time frame, we plotted the Fibs. So we got from the top all the way to the bottom. Okay, and now we got our 23.6, 38.2, 50%, 61.8, 78.6 retracement lines. The current price of the CNH is right here. And maybe your trading plan says that you trade the 50. So you are now waiting for the CNH to come to the 50. And from there, you would expect it to fall. If that's the case, you would take profits at 31.70. That's your exit. If it comes to the 50% retracement line, that's 32.60. That would be your entry short. And in case you're wrong, maybe you use the next retracement, in this case 32.80, as your stop. Okay, this is done now on a 15-minute time frame, not on the 4-hour time frame anymore. Okay, so this could be a valid trade plan. You just need to be a bit patient and have the CNH futures to tick a little bit higher, a few pips, a few ticks, and then get short, stop, target, let the CNH futures do its thing, and let your 4-hour market condition to evolve and propagate and move in the direction you predicted. Okay, that would be the plan. Now, what if instead of being a Fibonacci trader, you do UFO trading like I do? So at that moment in time, you have this particular trade available because there is a red UFO. So sell orders are now showing up on the CNH future. So you may want to take the trade right now at the current price, no waiting, right now. Stop 32.54, which is above the red box. That's where the stop goes. And then for the profits, then you're going to rely on the climate. I was telling you earlier that the statistics suggested that the down climate is supposed to last 6 candles in the 4-hour time frame. This is candle number 2. So we still have 4 candles to go. 4 candles times 4 hours. That is 16 hours of potential duration for the trade. So I'm just going to let the climate to propagate, and when I get to the statistical end, I will get out. Okay? So that would be the plan. That's what I would do, actually. That's my style, okay, which doesn't need to be yours. And now another style could be, maybe you're a breakout trader. Okay? Maybe your way to trade is, instead of trading up here like I was, or the Fib guy was trading up here, instead you wait for the evidence of the market falling, and when the market breaks a key support, this is where you enter with the breakdown. In this case, it's not a breakout, it's a breakdown. Okay, so that could be your style. So in this case, you will be entering at 131.70, and your rule could be stop 20% of the daily ATR and target 50% of the daily ATR. So you're shooting for catching half of the daily move, and in order to catch half of the daily move, you're willing to risk a fifth, 20% of the daily move, knowing that the average movement of the CNH future at the time of the screenshot, it's 200 ticks per day. Okay, so you are shooting for a 100 tick move in this case, 50% of that. So that would be the case. 3 different traders applying step 1 and step 2. Step 1 with a larger time frame, is it time to go long or short? Step 2 with a lower time frame, define entries and exits, and I show you different ways on how to do it, and then be ready to go. Now, the next step here is now taking the trade, and to take the trade, there is actually a mini step prior to clicking the button, which is you need to decide how many contracts. So to decide how many contracts, we will be using a trade calculator. Cannot wait. I'm about really very, very close now to jump to the real-time charts, do an example, and then we'll go for Q&A. I will be using TradingView, which is also a free charting tool that is available on the web. So I will be using that in a moment. And in this case, so if you plugged the data from the example that we had, example number 1, so you would have an entry short at 32.60 with a stop at 32.80. So you're risking 20 ticks in order to take profits at 31.70. You are actually shooting for 90 ticks of profitability. That is a 4-to-1 trade, pretty nice. And let's say your risk appetite is to risk $50 per trade. So notice that this would allow you to use 8 contracts. 8 contracts with risk $45. 9 contracts with risk more than 50. So you cannot do 9. You would do 8. If you are this guy and your trading plan says maximum risk 50. Okay, so you would calculate the trade size, and then you would be, now that you know the amount of contracts you want to use, you would just place an order with your broker platform. And now you are short CNH futures, and here we go. Now, this was the case of using trend lines with Fibonacci. If you were to use auto climate and auto UFOs, then of course your values will change a little bit. So the entry was 16, the stop was 54, the target was 11, and in that case that was a 5-to-1, just a little better. And this trade will be taken with 4 contracts instead of 8. So actually you need less money to do the trade, and you will make 5 times more instead of 4 times more. So in this case, it looks a bit more advantageous, even though the prior trade was great as well, 4-to-1. I mean, I would take those all day long. And then on the other case, on the last case, we were using moving averages combined with a breakout. So again, the only thing that changes is the entry was 3170 with a stop 3210 with a target 3070. And that was a 2.5 to 1. That was a bit worse. That's classical with breakouts because you are waiting for the move to happen and you enter as the move is happening. So in other words, you missed a piece of the move already. So it's not wrong at all, but definitely it hurts a little bit, the reward to risk ratio. And again, it has pros and cons. You got more evidence, but you got less reward to risk ratio. So again, it's all about trading styles. And this trade could also be taken with 4 contracts, where 4 contracts would also risk $45. So that's how you plan the trade. And then the result, when in this case, the trade was good. From there, it dropped. The guy using the auto climate, also experienced the same move because it was the same trade. The guy using the moving averages also experienced the same move because it was the same trade. This was a trade that took 3+ days. It was a 205 tick move in the best case. And congratulations. This is the way to plan a trade where the risk is contained, you follow a process, it's systematic, and then you repeat. Okay, and you are doing that with a beautiful product like CNH futures. Great level of volatility, very healthy level of volatility, I would say. The 200 ticks a day is definitely not boring. It's definitely not crazy. So it's pretty cool. And you can do this with, as I did, with a 4-hour time frame combined with a 15, but you can also do it with lower time frames, or you can also do it with larger time frames. Okay. So I'm about to do this live now, okay? And as I said in the session, I was going to grant you access. This is my little thank you to you all for joining us in the session today. You can scan this QR code or just go to our website, tradeWithYourForce.com/apps, and you can get your own auto climate for TradingView. This is free for life. The only thing you need to do is you need to utilize the coupon code CLAIM8, okay? Without this coupon code, by default, you would be charged $8. But if you use the coupon code CLAIM8, then it becomes free and it's free forever. And that's it. And hopefully that helps you at least to do step 1 in a way that is mechanical and, again, repetitive and no confusion, and you are focused and objective. Okay. In case, especially if you are new to trading, hopefully this helps you. As I said, many other techniques and tools are definitely valid. You don't need to use this one, but that's what I do. So that's what I am able to share. Cool. So I'll just take a sip of water, give you a moment to scan the QR code in case you haven't had the time. And we go live now. We go live. We got 10 minutes to find the trade, to do the process, and then we go for Q&A. And anytime, CY, if you need to add anything or interrupt me, or maybe it's time for the Q&A and I got distracted and you would like to let me know, please feel free to let me know. Okay, happy to accommodate.
Okay, sure.
Wonderful. So anyway, so let's go live. Okay, so here is a chart of the CNH, and I'm just gonna go ahead and, for example, look at a 1-hour time frame. Okay, I'm just gonna go be a little bit more active, and in this case, you can see that if I was to look at auto climate, yes, correct. If I was to look at auto climate, I got a blue dot. Okay, so that's it. The answer to step 1 is I want to be a buyer. If instead of using auto climate, simplify everything we have on the screen, okay, blank screen. If instead of using auto climate, let's say you are looking at moving averages, so you can see how the yellow average is above the orange average. So that is telling you have an up movement on the 1-hour time frame. So what is the 1-hour time frame style? Let me go back to here. The 1-hour time frame style is intraday. So I'm doing intraday time frame now. I just became more active. So I'm looking at the 60-minute time frame, which I'm gonna combine with the 5-minute time frame. Okay, this is what I'm about to do. So step 1, should I be a buyer or a seller? So if I look at the moving averages, I should be a buyer. If I look at the auto climate, I should be a buyer. If you are looking at other techniques, okay, again, maybe you are drawing trend lines. So I guess it's pretty obvious that you got an uptrending market here. So that's it. You got your answer. And again, maybe you use different techniques, and actually you may even have a different opinion than me, and it's fine. This is what makes the markets, traders with different opinions. But the point is not about having an opinion where you are right or I am right. The point is the market is right all the time. So our job as traders is, I mean, for sure, we love to be right all the time, but our job really is to be systematic on the application of a methodology, while in case we're wrong, we got risk under control. Okay, so that's why I am pre-planning the trade one step at a time. So step one told me I want to be a buyer. Step two now is for me to plan entries and exits. So I'm going to do this and I'm going to document this so it's not confusing. So we said I'm trading CNH futures. Okay, I'm trading CNH future. I decided I want to go long. So now I need to determine my entry, my stop, my target. You know, I even use what I call a safety target, which I will pass on that today just to keep it simple. But entry, stop, and target, at least those three we need. And so how am I going to do that? Well, I'm going to switch from the 1 hour time frame to the 5 minute time frame. Okay, you can see here number 5. That means I am now looking at a 5 minute time frame. And what can you do? Well, you can do many things. So maybe you're looking at the UFOs and now this is the prices where you want to buy. But I will just go and use other techniques. For example, let's go back with the case where you are a Fibonacci trader. So you will take a Fibonacci retracement line, click on the bottom, click on the top, okay, and you have multiple retracement lines. Again, let's say that you are the 50% Fibonacci guy. So you want to trade there. Okay, and let's face it, there are many ways on how to use Fibonacci. Maybe you do nested fibs, you use fibs from different time frames, you combine fibs and projections. So again, you know, I'll just keep it simple, use the 50% line. Okay, the 50% line is 7.1284. Okay, 1284. So that means that my entry would be 7.1284. That would be my entry. Okay, my stop would be the next fib if I was to do this, which is 7.1248. Okay, so 7.1248. Okay, and then my target. Okay, so maybe I'm going for the top. Okay, which the top is 7.1432. So let's say this is your trade. Sorry about that. Give me a second. So let's say this is your trade. Okay, so 1284 entry, 1248 stop in case I'm wrong, 1432 target in case I'm right. So now the next step was to calculate the size and place the trade, right? So step one, using a larger time frame, what's the market condition? We talked about an uptrend, so I want to be a buyer. Step two, we talked about entries and exits. In this case, I am pretending I am one of you, Fibonacci trader. It could be support and resistance guys, it could be the UFOs I use, you name it. And then now you need to place the order, but before you place the order, you need to calculate the size. Okay, so how can you do this? Well, TradingView has a beautiful, very easy to use trade calculator. Okay, here on the right. Now, for me to be able to use the trade calculator, I need to do a little trick because, as you know, the CNH futures contract has not been released yet. It will be released on December 11, isn't it? So in other words, I cannot place an order yet, but you know, I could do a little trick that will allow me to simulate. So please ignore me for a moment, because what this will do, forget about the chart in the middle. Now look at the calculator. That's what matters now on the right. So now this is just a little trick for me to be able to simulate the trade so you can see the P&L. So I'm gonna go ahead and type 7.1284 is my entry. My stop is 7.1248. And my profit is 7.1432. So if that was to be the case, let's zoom in and discuss this. So what do we have? So we have a trade where if wrong, we're going to lose 36 ticks at a rate of 2 renminbi per ticks, we are losing $10.08 converted to US dollars. Or if right, we're gonna make 148 ticks. If we reach to 7.1432, that is 148 ticks of profit at a rate of 2 renminbi per tick. That's $41.43 converted to US dollars. And therefore, we are risking 4 times less than the amount of money we will make if right, or we are about to profit 4 times more than the amount of money we would lose if wrong. We have a reward to risk ratio of 4 to 1. Now, if you do this with one contract, the risk of the trade, as we said, is $10.08. But let's say you have a trade plan that allows you to risk, I'm going to pick $88. This is your trade plan. Your trade plan allows you to risk $88 per trade, and that's what you do all day long. Every time you take a trade, you risk $88. So if you want to risk $88 with an entry at 84, a stop at 48, and a target at 1432, that allows you to use 8 contracts. 8 contracts times 30 ticks of loss is $80.62, which is less than 88, which is your maximum risk appetite. And what you would do now, which I cannot because the contract doesn't trade live yet, it will start trading live on December 11. What you would do now with your broker is click the buy button, and you are in the trade where your risk is contained, your reward is pre-quantified. The whole thing is under control. So now there is no need to be emotional. There is no need to, improvise. There is no need to guess. It's all under control. And as you see me do it, the first example I gave you was using a daily time frame. The second example I did was using a 4-hour time frame. The example I just did was using a 1-hour time frame combined with a 5-minute time frame. So in other words, talking about multi-style, this is an exciting time for Bursa Malaysia, for currency traders, for futures traders, in the sense that we are now dealing with a product which is really multi-style, which could serve traders of all natures and all tastes when it comes to trading and how to plan trades and what you are looking for from those market opportunities. And with that said, I am kind of 1 minute away from the theoretical time for Q&A, if I'm not mistaken. I would just want to one more time give you an opportunity to get a screenshot of the QR code in case you missed it. I'm going to come back in a minute. I also want to say that on our website, there is a question section. If you are learning trading and you have questions about trading in general, you can take a look at our forum. Those questions may help you. My email is there in case that helps you too. Happy to help. And again, it's been a real pleasure for me to have the opportunity to hopefully help the trader community in Malaysia, and especially the currency traders that are now just waiting for December 11. So CY, I am yours.
Okay, for your informative sharing, I believe many of our audiences here have gained valuable informative insights about how to take advantage of the trading opportunities and some of the trading strategies available in trading the CNH currency futures contract. It's now time for our Q&A session. So if you have any questions related to Jose's session or anything related to CNH contract specification, you can simply type your question in the Q&A box. And make sure your question is sent to the Q&A box so that I can easily locate and address your questions. While waiting for your question to come in, as I've shared with you early on, Bursa Malaysia Derivatives is generous to give away some lucky draw prize. Now let me brief you on how you can participate this lucky draw and stand a chance to win the prize. There will be 10 lucky winners who will be randomly selected, and of course the prize worth a total of 300 ringgit. And I know many of you have been eagerly waiting for this very moment. And before we proceed, I kindly ask for your patience and attention. So you don't have to rush to do the questions yet, because it is not based on a first come first serve basis, as we will provide you sufficient time for you to complete the required task after the webinar. So how can you participate and be eligible for the lucky draw? You simply need to complete just 2 simple steps. So firstly, you need to complete a simple short quiz questions. It's only 3 questions. And secondly, you need to fill out the survey form provided. And the cutoff time for you to complete the task is 10:30 p.m. So you can take your time to finish these 2 tasks after this webinar. The results will be announced within 1 week starting from today. So for all of you, you can take a screenshot on this page, or you can find the link in your chat box later. Remember, you must complete these both tasks in order to be entitled to participate in the lucky draw. So don't worry, later on I will come back to this page again and everyone will have sufficient time to participate in this lucky draw. Now let's continue with the Q&A session. I see there are many similar questions that is in the Q&A box. And to ensure we have enough time for all questions, I will be selecting and summarizing 2 to 3 or 4 to 5 most relevant questions from the Q&A box. And please note that due to time constraints and limitations, we may not be able to answer all of the questions. So let me see in the Q&A box for a little moment. So I see there is one question that is related to the FCNH contract. So this question is for To. So To, whether there is a lunch break for the trading session for FCNH?
No, there's no lunch break. We will be all the way from 9 a.m. until 6 p.m.
Okay, so for those of you who intend to trade the FCNH, do remember that there is no lunch break and it's a continuous trading time. And second question, same thing, it's for To. What is the initial margin requirement for FCNH?
At the moment, we don't have the official, but tentatively, the margin requirement should be somewhere around, I mean, I will base on the worst case assumptions, will be somewhere around renminbi amount, assuming like 4,000.
Okay, and
I think will be big for the official. I think will be somewhere around that range.
all right. So for those of you who like to trade the FCNH currency futures contracts, so do stay tuned with Bursa Malaysia Derivatives to know what is the initial margin requirement. And I think one more question for To as well. Whether will Bursa Malaysia Derivatives introduce or offer more currency futures in the future?
Yeah, definitely. First of all, we would like to see the success of this, the FCNH futures contract. If the success of this, the FCNH contract, definitely will be a motivation for us to looking for other currency pair as well. But at the same time, we will definitely looking for more currency pair in going forward.
All right, great. All right, there's a question, I think, for Jose. Jose, can you give a quick summarize about what is your framework for trading?
Yes, a quick summary is basically it's a two-step process where step one, using a larger time frame because they are more relevant, you would want to understand what's the market condition. If you're a trend trader, you would call it the market trend. So you have a clear decision about going long or going short. That is the purpose of step one. And from there, you would move to step two, where knowing you decided you want to go long or go short, you would then decide about entries and exits in case of right or wrong targets and stops. And when all of this is clear, then the trade is defined and it's a matter of placing an order.
All right, another question for Jose. What do you mean by being a mechanical trader? And whether does mechanical trader has any difference between being an automation or using algo trading?
Yeah, I mean, the principle here is very simple. The principle is that consistent action leads to consistent results, whereas inconsistent action leads to inconsistent results unless you're lucky. And if you're lucky, normally it doesn't last forever. So the goal for a trader is to be consistent with your actions so you can produce consistent results. Of course, your action should be a methodology that gives you a statistical advantage. But once you have that, what you could not do, should not do, it's to randomize how you apply the methodology. So The opposite of randomizing your application of the methodology, it's what I call being mechanical, being systematic. Taking it to an extreme, indeed, algo trading is a way to be 100% mechanical because a computer is doing the job for you. Even though, of course, like everything in life, you got pros and cons of algos and computers versus humans. But definitely, no matter if you are a computer, which I don't think you are, but no matter if you are a computer or you are a human, you should act mechanically, meaning that you just keep replicating consistently a set of actions.
Okay. Another question also for Jose. Whether does FCNH, the strategy that you introduced using UFO, whether does is it applicable for doing scalping?
Yes, I mean the answer is yes, even though I'm going to add the classical "it depends." So the answer is yes, because the principle that we discussed today applies to all time frames. You know, even if you were to use a 1 minute time frame, even if you were to go down to tick time frames and things like that, the same principles would apply. You can identify using a little bit of a larger time frame the market condition, and then with a tiny time frame, plan your entries and exits, and now you're scalping. So the process does apply with UFOs or even other techniques, no problem. The one thing you need to keep in mind though is the liquidity of the product. If you are doing scalping with a product which is very, very liquid, then it's definitely very convenient. If you are doing scalping with a product which is less liquid, I mean the Chinese yuan, I guess that there is no doubt is going to be a very liquid product in the sense that is one of the most relevant currencies in the world. Some people would say the second most relevant currency in the world. Some people would may even point at first position. Again, I'm not going to get there, but definitely it's a liquid product by nature. But the moment it is released in the exchange, probably takes a few weeks, maybe a few months, depending on the time frames that you want to trade, for you to see liquidity where the bid and the ask spread becomes narrow enough, where scalping actually is convenient enough. So, long story short, the techniques that we discussed today could be used for scalping. Of course, to do scalping, you need a product which is a bit mature in the sense of liquidity. And I would say just give Bursa Malaysia, a little bit of time for liquidity to pick up, which should happen quickly, and from there you'll be ready.
All right. And another question also for Jose. What would be a suitable time frame for beginners to trade currency futures?
This is a very good question, but to be honest, to answer your question, I would need to ask you a question because really the question is, what is your schedule? What does your schedule look like? What is the time at which you have time to sit in front of your computer and plan your trades? What is the size of your account? Meaning how many contracts can you use per trade? As you saw, more contracts add more risk, less contract is less risk, and therefore, depending on the size of your account, you can use either more or less contracts. So why is all of this important, and why am I asking those questions? Because, well, let's say you have a goal where you want to produce, I'm just gonna pick a random number, let's say you want to produce $1,000 in US dollars of profits per month, and that's your goal. But let's say your account size is relatively small, and therefore you are limited on how many contracts you can use each time. So then you have no other choice to trade very often to produce this result. Where if you were to have a larger account, maybe you take 3 trades a month and you could produce $1,000 of profit, and you can be more relaxed. So again, depending on your account size and therefore how many contracts can you trade at the same time, depending on your availability for time, what time of the day you sit in front of your computer to trade, depending on all those factors, that's how you should decide which time frames to use, because that sets your style, which is depending on you, the trader. To me, there is no best or worst style to trade. There will be pros and cons, which I'll mention very quick because of lack of time, but there is no best style. Is whatever works for you based on those parameters. Now, a couple of pros and cons to keep in the back of your mind is the smaller the time frame, the more often you trade, so the higher the risk of getting emotional, which is a normal thing to happen, especially when you're new. So maybe if you are a person who is very disciplined by nature and it's in your genes, maybe you can start with very small time frames, and that the benefit is that you can practice a lot and gain experience quickly. That's great. Maybe you know yourself and you know that your genes is more of a person who has some limitations, and again, we all have weaknesses and strengths, so we just need to be honest with ourselves as traders. So maybe you have some limitations to control your discipline, or maybe you've got emotional in trading before and you know that. So maybe using a little bit larger time frames will give you more of a breathing space between trade 1 and trade 2, so you can just cool down and not get those emotions involved. So you need to balance out everything I just said very quick here for you to decide what's the ideal trading style for you to begin. But there is not ideal style. Is whatever is in line with you, the trader, because you are the human taking the trades and we are emotional beings.
All right, so you have already, believe all of you who really understand whether to select a suitable time frame. There are a lot of factors to be considered. All right, we are going to take one more last question. This question is also for Jose. How many tools, let's say for beginners, to use in order to make a good timing for entry and exit?
It's gonna be a balancing act. As I said earlier in the presentation, I am a very perfectionist trader. Sorry, not a very perfectionist trader, a very perfectionist person, not a perfectionist trader. So in my early stages of learning how to trade, that was a long time ago, in 08 to be specific. So I was experimenting with many tools, and I was, making my life very complicated with many tools to plan on a trade. And while in theory, many tools could add more odds in your favor, the reality is that in the end, you kind of got, you get a bit paralyzed with too many tools when it comes to your analysis. Some tools contradict each other, and you end up either not taking enough trades, or even worse, you take trades where you are extremely confident of those trades because you have used 15 different tools to plan on the trade, and then you get stopped out, and then it's going to kill your confidence all the way. So in trading, you have to learn to be a bit more pragmatic, a bit more flexible. My background is engineering, so believe me, I'm very perfectionist and so on. But I had to learn to kind of let go. No one can predict the future for sure. Trading is not a game of prediction. Trading is a game of risk management and probabilities. So just find a methodology where with a few tools, you can make it compatible with your lifestyle. Maybe you're a busy guy and you have little time to plan your trade. So just choose a few tools that allow you to plan a trade with a little bit of odds in your favor while you manage your risk, and you keep repeating that, and you should be okay. Whereas another trader, which is making the life very complicated with too many tools, may end up frustrated instead of successful. So keep it simple. That's my advice. I would say more than 3 to 4 tools, it's too much.
All right, thank you, Jose. Now, for those of you who would like to trade these FCNH currency futures, first, it's important for you to equip yourself with the basic knowledge in futures trading. So it's essential for you to understand how does the futures market work, and many other foundational knowledge. And through the Q&A box question, I noticed some of the participants may be asking very basic questions related to futures trading. So for those of you who do not have any background in futures trading, I strongly encourage you to participate this LLF online workshop, whereby this online workshop, it's also sponsored by Bursa Malaysia. So if you are new to futures market, we highly recommend that you join our upcoming online workshop, whereby this online workshop is designed specifically to guide beginners through the process of trading your first futures contract. We will be covering everything from A to Z, providing you the knowledge and skills needed to kickstart your futures trading journey. So once you understand what is futures trading, it's easier for you to understand what is currency futures trading as well. So this LLF online webinar, it's limited to the first 50 online attendees. Therefore, we encourage you to register quickly to secure your spot. Once you access this link, go to the Saturday column and register yourself accordingly. Now, as we are near to the end of this webinar, I would like to remind you that about the lucky draw and the steps required for you to participate in this. So again, you can take a screenshot on this page, or you can find the link somewhere around in the chat box. And after this webinar ends, you can take your time to complete these 2 tasks. To be eligible for the lucky draw, all you need to do is to complete 2 simple tasks. Firstly, remember to complete the short quiz, and secondly, remember to fill out the survey form. you must complete these 2 tasks in order to participate the lucky draw session. And please note that the cutoff time for participation is 10:30, so don't miss this opportunity to participate and stand a chance to win these exciting prizes. We will be announcing the lucky winners within 1 week on our excellent Facebook page. And after you have completed these 2 tasks, remember, if you don't have any basics in futures trading, you can register yourself in our upcoming LLF online workshop as well. All right, this comes to the end of our session for today. Thank you, To, and thank you, Jose, for sharing with us an informative session. And thank you all for joining us today. We hope you found this webinar informative and engaging. And I believe you have learned lots of informative knowledge, the basics of CNH currency futures contract, and some of the pragmatic and useful trading strategies shared by Jose. So, for everyone, have a wonderful night and good night. Goodbye.
Thank you, everyone.